Robert Omotunde, who is an investment analyst with AfriInvest, joins me now to share his perspectives on the markets. Good morning to you, Robert.
Good morning, Harry. How are you today?
I'm very well, thank you. But the markets are not looking too bright. Let's focus more on the fixed income market because, of course, from conversations we've had in the last couple of days, we know that investors are taking are kind of spooked about what's going on right now, and they're still waiting for economic policy directions. So basically, that's that. But for the fixed income segment of the market, why do we keep seeing this up and down movement?
Well, it's not unconnected from the general macroeconomic situation of the country. You're aware that there are still concerns around FX. These are more or less, we could say, pull factors that are affecting the market. And of course, in the fixed income market, we're also seeing it. The sentiment is weakening, and even local investors are not sure of where the bottom is going to be, and those are the factors that are continuing to play out in the in the fixed income space. But it's interesting to note at this time that there seems to be some form of convergence of yields. If you check, for instance, for the bond market, you see that yields are trading at tight bands between 15.28% and 15.87% across all tenors and across benchmark and off-the-run bonds. For us, this is an interesting situation because if you consider what is happening at the equities market, where the sentiments are down, there are more pull factors than the factors that can drive the market, and so fixed income market should portend some form of attractive point for investors to play, particularly at the high yields that we are seeing at the moment.
But looking at interbank rates, even though we saw that the lending rates actually climbed about 934 basis points, how much more higher is this going to go, particularly since it seemed as if liquidity worsened at the market? Now we have FAC allocations expected to provide some liquidity for the market. Are we likely to see rates increase?
Well, to the extent to which the market suffers intense depth of liquidity, we'll begin to see rates at the interbank, particularly the overnight and the open buyback rates climbing higher. But the temporary respite that the market may experience, like you noted, will be FAC inflow, which may be expected, say, in the next couple of days. And for us, what is happening, what the market pictures, particularly at the interbank, is showing to us the situation of liquidity, in the system. It may not necessarily define the opportunities that investors can take advantage of, particularly in the fixed income market, because at the interbank, it affects more of the banks, banks giving, lending themselves money at the rate for the overnight and the open buyback rate. But for investors who want to take advantage, of course, you know that the implementation of TSA is stifling liquidity within that space, and we may continue to see the volatility that we are experiencing in terms of rates at the interbank, even in the near term, depending when there is some form of respite in terms of liquidity.
Well, the respite might not likely be coming anytime soon for the equities market. Do you think that even though prices are at attractive levels for some, do you think this is the time to actually enter the market, that's the Nigerian equities market space now, or exit?
Well, for the equities market, Nigerian equities market, a lot of caution is needed. Like I noted, we have the pull factors and we have the push factors. While we say that the sentiment is weakening, there's also the contagion with what is happening in the Eurasian market. It seems to be, trickling down even into our market. And we've noted earlier that foreign investors have been staying on the sideline. Reports from the NSE further buttress this. The market is majorly, equities market in Nigeria now is majorly, driven by the locals. And their situation has always been they take the back seat and watch until the foreign investors are taking positions, they don't take position. So for now, for equities markets, a lot of caution is needed. As much as we have said that the prices are attractive, valuation is quite cheap at the moment. But again, nobody knows where the bottom is, given this different sentiment that's been playing out. But in the near term, what we have been preaching is that investors would need to take medium to long-term perspective about the market. For short-term players, it's a little dicey, given the various headwinds that is currently developing the market. So it's still more of a cautious play for the equities market.
So well, let's keep our fingers crossed, and hopefully the market will bottom out very soon and investors will begin to get reprieve. But thank you so much, Robert, for sharing your perspectives with us. Do have a profitable day.
Thank you.